Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and the latest jobs report just came out. Jerome Powell has been looking at this to kind of see signs of labor market softening, whether or not he can tighten up the rates more. So we're going to talk about what was in the report and kind of how he might interpret that.
Two Super Guys Trade Stocks.
The real question is, do you soon think we're going to be going like, can I get one of those jobs, man? No?
Yes. Sorry. Turn the light on.
Totally going to happen.
First
Probably.
take, guys.
Yeah, I love it. But this is the headline from CNBC, right? 336,000 jobs in September. Crushed actual expectations. I'm going to show you like what the expectations were here in a second, but I also want to show you this chart about where the jobs were in terms of segments, because that kind of highlights something I want to talk about separately about whether or not people are being underemployed a little bit. If you look at the segment that really kind of blew the doors off here, it's leisure and hospitality. So that's kind of your hotel staff and a lot of wait staff from restaurants. Not exactly the highest paying jobs in the world, but definitely something that's been in demand. It's just whether or not these are going to be the kind of jobs that really move people up the socioeconomic ladder, or simply allow them to stay alive and stay employed and stay in the kind of functioning economy a little bit.
I feel like I have like a sample bias because I feel like on LinkedIn it seems like it's the exact opposite is happening. I don't know if anyone else is experiencing that, where it seems like there's like way more layoffs, but I don't. Maybe it's just I don't know. It's weird.
So by sector, like the larger businesses are still laying people off, like your kind of mega cap like tech kind of companies. They haven't been hiring or even have a net negative in terms of the actual number of employees, but your little mom and pop establishments, restaurants are still hiring like crazy. So that you can't really equate those two in the economy, right? It's one thing. Oh, I was working as Google as an engineer making 300K, and now I'm working at my local restaurant as like the bartender, making like tips plus $3 an hour. It's like these jobs are not equivalent to each other.
Right.
So although the job market is still doing well in terms of the number of people employed, the kind of quality of those jobs has declined a little bit.
Cool.
Yeah. So the consensus was for only 170,000 jobs. If you actually saw midweek this week, we got the ADP numbers came out, and ADP looked like maybe the market was going to be starting to add fewer jobs. It was slowing down a little bit. So the market kind of responded to that positively. Because we're in a phase right now where, we want to see the kind of economy start to have indicators that it's cooling a little bit more. So the Federal Reserve will be less likely to keep accelerating these interest rate hikes and keep the pressure on cooling down the economy. You did see hourly kind of earnings here came down a little bit. 0.2% up for the month, but 4.2% is like now the yearly pace. I'll show you a chart here in a minute that why I said come down a little bit. The pace of increases in annual kind of wage increases is coming down.
It is. It's kind of funny. So I day trade. I'm not good at it. That's why I don't talk about it on this channel. But they release so many numbers every week at about 30 minutes after the open. And a year ago, it was much easier to predict, like if you got the result, if it was going to be good. But now it's just like a complete dart on a board. Like if good results can be horrible, and it just doesn't make any sense, or the opposite, it's impossible to try to guess.
With this data on Friday, you saw like the market do like a U-turn where it started to head negative immediately when it came out, as that's largely the direction you would anticipate it going based upon, the current kind of consensus. And, in fact, we got a number that was so much better than expected. But then it pulled U-turn and completely swung around.
Yeah.
All right. So, the question here is slowdown. What slowdown? The U.S. labor market continues to exhibit amazing strength is basically what this person is saying here, with doubling the number of job kind of ads that they anticipated for the month of September. So we have yet to see like a real meaningful slowdown. Yeah, people are like arguably getting underemployed, like we were just talking about in terms of industries that are adding jobs, but the overall number of jobs is still growing. This is the other thing I was talking about here. This is the actual annual pace of salary increases. So, we were hovering up here at this 5+% range for annual salary increases and for hourly workers. We've kind of cooled down a little bit down to this low 4% range here now, which is kind of the number you should target basically at a bare minimum when you're looking at your annual performance pay raises. That's just keeping the same amount of buying power at a very minimum compared to the rest of the market. So, it's a good number to have in the back of your mind as we start to head into the end of the year and maybe start looking at 2024 compensation. Just FYI.
I tried to argue for mine. It did not work.
Yeah. Yeah, it's amazing how some, I don't know. Well, we could do a separate video on that topic alone, put it that way. Um, The other kind of major worry or indicator or thought process after these jobs numbers is that this has emboldened the Federal Reserve to continue raising rates. We were anticipating another 25 basis points at some point this year, according to the most recent Fed dot plot. They've been horrible at predicting things like that, but that's where they were going into the or coming out of the most recent meeting. The kind of thought process now too is that not only will we maybe see another hike, that like odds of that increased after this jobs report came out, but the actual time we will stay at this elevated level of the Fed funds rate will likely become even a little bit longer. Now they're pushing back rate cuts into like the later part of 2024 now, so we may be at this elevated kind of interest rate environment for another 12 months from now, somewhere in that ballpark.
Yeah, for the TLT trade, I was projecting like 12 to 18, so
Yeah.
it's all right.
Yeah, still in range there. This is kind of a data point that Powell talks about is how many jobs are available per worker. This is kind of flipped on it, so I had to look here a little bit, but still, you're looking at about a 1.5 jobs available per worker available in the U.S. workforce. We were actually at a 2-to-1 ratio at one point in time, so that gap has come down a little bit. So now, I guess it's about 1.5 or so jobs that are available per worker. I know it's flipped opposite.
Yeah.
So
Okay.
this is number of unemployed persons per opening, as
Oh.
opposed to
Okay.
he talks about typically as the number of jobs available per unemployed person.
Okay.
That's why it's like it doesn't
I was
quite
gonna be
jive
like,
with the.
I think you're reading that wrong. My phone's in front of the title, so I couldn't see it.
Yeah, it's all good. I'm just telling you about the way he typically refers
Yeah.
to it, and the way it kind of makes the most sense to me as well. So that's why I use it that way. But so we've cooled down a little bit in terms of that ratio there, but we're still having more jobs available than we have workers available for those jobs. And another indicator of kind of the health or confidence of the workforce is here. This is quits. This is number of people going just like, you know what, bro, I'm on to the next one. Okay. I'm going to go out and get myself a nice fat 15, 20% raise because that's the average kind of increase in salary from one job to the next, Dylan, by the way, FYI. And
I
so
know.
that number has come down a little bit over time. We did peak up over 3% here, but now we're down to 2.3%. Still, a little elevated from where we were pre-pandemic, barely, but not by a significant portion. So people are a little bit less confident in their ability to just like piece out their job and say, like, you know what, maybe we'll get a better one.
I don't want to go off on a tangent here, but the generations have changed. Loyalty is no longer good in my opinion. It just means that you could take advantage of from what I've seen in
Oh,
our industry. Yeah.
yeah, you see it on both sides of the coin.
Yeah.
Yeah, I completely agree. It's just how uncomfortable do you want to be?
Yeah.
It's a matter of whether or not you're a cruise control kind of person, or if you want to be constantly on the go and innovating and trying to get to new levels, which is a hell of a grind, but it can certainly pay off for you.
As soon as they
I don't
got
know.
rid of pensions, that whole thing kind of died. So
Yeah. Oh yeah. You certainly see it. That there's no love lost anymore. It doesn't matter what your title is, even if you have a C in the title. Sometimes now you can be fired on the spot. It's pretty wild.
yeah, go get that money. Don't worry about the company. They're fine. They'll replace you immediately. All right, guys.
Exactly. See you in the next one.